Hello, my wonderful people. Good morning, good afternoon, and good evening, wherever you are hearing the sound of my voice. How are you doing? I hope all is well. Thank you for always coming my way. To all my returning subscribers, God bless you. Thank you for always being there. And for those that are contemplating of joining this channel, the Slice of Sun, thank you. This morning, I've come with a wonderful information that I think will be beneficial to you. But before I do that, I'd like to give a special shout out to these wonderful, amazing supporters, people that have been of tremendous support and help to my channel. In no particular order, thank you so much. Shout out to Sophia Space for your amazing support. Thank you very much. Shout out to Niger Mom in Australia. Thank you so very much for your wonderful support. Also, a shout out to Lucy Inside. Thank you for believing what you are doing, and thank you for your support. Thank you for your help. Thank you also to Family Church Group. Thank you for your amazing support. Also to Suhaida Ghani. Thank you for always coming to support us. Thank you for your unfailing support. Thank you for Sheila for your amazing and wonderful support. I do not take it for granted. I hope I've mentioned all the names I need to mention. So thank you so very much, every one of you, for your support, and for all my family members, family in YouTube. Those are my real family members. I appreciate you for your support and for your love. God richly bless you. Thank you so much. Okay, you are welcome back. It's Slice of Sun is the channel. Today, I want to give you a vital information about private equity investment. Private equity investment funds for investors. Private equity investment funds for investors. And this is the time for you to register. If you have not done that, register now. Private equity investment funds for investors. Now, let me begin by saying this, that smaller investors, they have three ways to participate in private equity. They can invest in a startup or private company as a member of the friends and family group. Now, they can also buy stock in a publicly trading private capital firm or buy an exchange traded fund that invests in private capital firms. Now, let me explain this bit further. Private equity investing is investment in a company that is either privately held or taken private through a buyout and reorganized. I repeat that. Private equity investing is investment in a company that is either privately held or taken private through a buyout and reorganized. Now, smaller investors have three ways to participate. I repeat, smaller investors, they have three ways that you can participate in private equity. You can invest in a startup or private company as a member of the friends and family group. You can also buy stock in a publicly trading private capital firm or buy an exchange traded fund that invests in private capital firms. Let me talk a bit about startups. Startups, if you know of someone who is trying to start a company or you are the one yourself who is trying to start a company, this is a good moment. This is a good time to invest. This is a good time to invest if you are a small investor. You can even perform work in exchange for stock in the company. This is called, sweat equity. Now, most startups get their seed funding from the founders and their friends and family members. This investment range from a few $1,000s to hundreds of thousands of dollars, and it also depends on the resources available. I want you to take note that the first investors will have their percentage ownership in the company reduced when an angel investor or venture capital firm steps in it. Let me give you 3 types of private equity strategies so that it will help you in making your decision. There are 3 key types of private equity strategies. One is venture capital, one is growth equity, and another one is buyout. Now, these strategies don't compete against one another, and they require different skills to be successful. Yet, each has a place in the organization life cycle. Let me emphasize that again for you to understand what I'm saying. There are 3 key types of private equity. 1, venture capital, growth equity, and 3, buyout. And these key strategies, don't compete against each other at all in any way. However, they require different skills to be successful. Here is a closer look at each private equity strategy so you can have a better picture, a full picture, and understanding when building portfolios. Let me take it one after the other. I want to speak on the venture capital first. Venture capital firms invest in startups with the goal of building them up and either selling them to larger companies or taking them public. Buyout firms, also called corporate raiders, take over existing public and private companies. Usually, they use leverage buyout strategies to do that. So that is about venture capital. Then the other one, which is growth equity. This second type of private equity strategy is growth equity, which is capital investment in an established growing company. The capital investment in what? In an established growing company. And growth equity comes into play further along in a company's life cycle. Once it's established, but it needs additional funds to grow. So it needs additional funds to grow. And as with venture capital, growth equity investment are granted in return for company's equity, typically a minority share. Now, listen to this. Unlike venture capitalists, growth equity investors can research company's financial track record, interview clients, and try the product themselves before deciding if the company is a wise investment choice. So they put that into consideration before they decide if the company is a wise investment choice. And any investment presents risk. But in the case of growth equity, the company has the chance to prove it. they have the chance to prove it can provide a return before the private equity firm invests. Everything about life is risk. Of course, you should know that. But as far as they concern, this one is concerned, they can prove and they can provide a return before a private equity firms invest. And the third one is the buyout. Buyout. What do I mean by that? The buyout, the final key private equity strategy. The one that furthers along in the company life cycle is buyout. Now, the best way I can explain this is this. Buyout occur when a mature, typically public company is taken private and purchased by either a private equity firm or its existing management team. I don't know whether you understand that. Now, let me try again. Buyout occur when a mature, typically public firm, or public company rather, is taken private and purchased by either a private equity firm or its existing management team. And this type of investment, this type of investment makes up the largest portion of funds in the private equity space. When a buyout occurs, all of the company's previous investors cash in on their shares and exit. They just go. Now, the private equity, PE firm or management team becomes the sole investor, and they hold a controlling share of the company. I think more than 50% of it. Now, there are two types of buyout. There is one that is called management buyout, in which the existing management team buys the company's asset and takes the controlling share. And there is what we call leverage buyout, which are buyout funded with borrowed money. Leverage buyout are buyouts that are funded with borrowed money. What am I saying in essence? If you are small investors and you want to invest, register now, do it now. PE firms for investors, private equity investment. If you are thinking of making it to be a big investor, this is the time for you to do that. Private equity funds for investors. Do it now, register now. That's all I have to share with you in a nutshell today. Thank you for listening to me. And I want to wish you the very best in your endeavor as investors. God bless you. Till I come your way again next time, stay blessed, stay on top, and continue to be a success in whatever you do. I wish you the best.